Welcome to Lesson 15 of the Market Profile series. Today, we focus on a fundamental truth: context changes the validity of structures. As Jim Dalton famously said, same structure, different meaning. Without context, every market level is just a number. To most traders, levels like value area high or point of control are mechanical signals. They read them like a recipe, but the market isn't a machine, it's a reflection of human behavior. Context is the filter through which we see reality. With context, you know which levels carry weight. You understand why the market behaves a certain way rather than guessing. Let's look at three practical examples of how the exact same structure changes meaning based on the environment. First, a poor high. In a balanced day, it represents weakness, a lack of aggressive buyers to finish the auction. However, during an initiative trend up, that same poor high might signal dominance. The market simply doesn't need to go higher to find sellers. And during short covering after a sell-off, it often marks a target zone where business is simply done. Same structure, three different stories. Example 2. Breaking the initial balance high. Is it a breakout or a trap? Only context knows. In a low volatility balanced environment, an IB high break is often just a test. Without follow-through, it's a fade opportunity. But on a volatile open with new sentiment, that same break is initiative. It's a confirmation of intent. It's not meant to be faded. Finally, let's look at POQ migration, the movement of the fairest price. When volume is low and the range is narrow, POC movement is often just noise. It has no real implications for future value, but if it follows a strong rejection and a new drive, that migration means value is shifting. A trend is beginning. One is noise, the other is opportunity. This brings us to the mental approach. Your job isn't to find a holy level, it is to read the intent behind the movement. Remember, structure is not your edge. Context is. Without it, levels are just historical data points. Stop looking for a reaction, start looking for motivation. A reaction without motivation is just a coincidence. Even the absence of a reaction is information. When the market doesn't react where it should, it tells you that a new bias has formed. To summarize, auction market thinking is behavioral, not technical. It's not just about where the level is, but when and how it appears. Context is the filter through which the truth of the market becomes clear. Use it wisely. See you in the next lesson.